You are listening to ChartingWealth.com's weekly review and forecast for the week beginning Monday, the 25th of July, 2016. We always start with IYY. What are we going to look at? We're going to go through the total market, which is represented by the ETF, the Exchange Traded Fund IYY. We're then going to look at SPY. SPY is an exchange traded fund that tracks the entire S&P 500. Then we're going to go to the Qs, QQQ. That is the Nasdaq 100. Then lastly, we're going to look at gold. Now, what is this weekly review and forecast all about? We're going to talk about where the charts are on the weekly in particular, because remember, we're always, when we talk about the charts, we're talking about waves. The market moves in waves. Some will say waves of fear when the market's going down and waves of greed when the market's going up. I think that's sort of a negative way to look at it, but the waves do go up and they do go down. And we look at the big wave because the market tends to always move in the direction of the big wave. So we want to once a week, not all the time, but once a week, track where the big wave is. We'll also talk about what went on during the week. That is our weekly review. Then we're going to look at what may be affecting the market over the next week. That is our forecast. And there is a Fed meeting coming up this next week where they're going to talk about interest rates that can have a big impact on the market. We're going to talk about that also. So for those of you who are long-term investors, you're worried about what's happening, where the market's going, this is very good for you to listen to, because the weekly chart is where the big money is. When the weekly charts roll over and go down, you need to think about either getting out of the market or going short on the market. And again, we want you to learn to read these charts so you can make those decisions for yourself. The caveat is we are not a stock forecasting service. We're not a stock calling service. We are an education firm. We want you to learn how these charts work. We do it very simply, very easily, so you can follow it. You can learn it yourself. You can make your own decisions. We're all about empowering you. We bring this to you every day. We have our daily review, and then once a week, the weekly review, which is what you're listening to right now from ChartingWealth.com. Also, I will tell you, Chapter 1 of our book, Charting Wealth, Empowering Your Investing by Learning to Read Stock Charts, is out. In fact, we have uploaded it at YouTube, and over the course of the weekend, we will upload it for all of the folks that subscribe to us. You can always subscribe at our website, chartingwealth.com. We'll have it up there and everywhere else. Then we'll, of course, in the next couple of weeks, put up Chapter 2, 3, 4. We'll keep going. We're asking you to give us some feedback. You can always give that feedback at Charting Wealth or on any of the places you'll find us, Facebook, Twitter, Instagram, YouTube, you name it, we are there. We love to hear from you. We are driven by your needs. That's what this is all about. We do not charge you for this, okay? This is our giving back to you. We want you to be empowered, you to learn how the market really works. I have multiple degrees, one graduate, one postgraduate degree, mostly business. Never learned anything about the market until I got myself powered up later. And now let's go ahead and jump into things. Okay, we're going to jump into first IYY. That is on our weekly chart. Let's talk about what IYY is doing. It started to cross over going down back on the week ending the 24th of June. It did not. It actually went down further the next week, but then popped up and has gone up for the last 3 weeks. That is the week ending the 8th of July, the week ending the 15th of July, and the week ending the 22nd of July. So we are in a confirmed up move. Derivative oscillator's been moving up all 3 of those weeks. The market has reached even higher highs. It is amazing to watch how the market continues to go up. People wonder, how does that happen? Why does that happen? Well, some could explain it that as we continue to inflate currencies around the world with all of the free money, that the market actually has real value. So as everything inflates, if you print twice the amount of money you had in an economy, prices on everything can double. Doesn't mean that things became worth twice as much. It means your currency became worth twice as less or twice the amount it had been prior to the extra money printing. Is that what it is? Is it the presidential election cycle that we talk about so much, that Yale and Jeff Hirsch cover in the Stock Traders Almanac every year? If you don't have that edition for this year, the 2016, you need it. So what do we see going on? We see the last 3 weeks we're still in confirmed up moves on the market, strong up moves. That's the total overall market as represented by IYY. If we look at what happened during the week on the daily, we sort of see the market, and again, not saying it's topping out, but it has slowed in its ascent over the entire week. The week started on the 18th, was a bit of a down, well, a bit of a day. And again, we use the Heiken Ashi candlesticks, means average pace in Japanese. Great teaching at the website on that. We see that we had a bit of a down day on Monday. And again, these down days that we see depicted on our daily chart are really days of indecision. We saw that on Monday and Tuesday. We're still above the 2-day trend line all throughout the week. We saw an up day on Wednesday, the 20th, and then the 21st, another real indecisive day. Friday, up a little bit for the day, but still indecisive, tracking pretty much sideways. So is the market topping off? Is it just waiting for the Fed meeting coming up this next week? Who knows? Is it just digesting? We don't know yet. We do know that we are in a confirmed up move. Excuse me. We do know that the derivative oscillator is losing energy, and we do know on the daily chart that the MACD is moving toward, not rapidly toward, but is moving toward the signal line. So we'll continue to keep that kind of stuff in mind. That's where we are on the full market, everything on IYY, the Total Market Index Fund put out by iShares. Now, let's look at what's going on with the Qs on the weekly chart. I'm sorry, the S&P 500 as represented by SPY. It has been going up the last 3 weeks. Also, another up week at the end of the week ending the 22nd of July. So we have continued strong uptrend. Actually, it closed above the Bollinger Bands. Now, the Bollinger Bands are volatility bands. They're like big rubber bands that as the market shows volatility and moves, they move up with it. But it's outside that. Typically, the market doesn't remain outside the Bollinger Bands. They usually either pull in or the Bollinger Bands expand out to meet it. But right now, we ended up outside the Bollinger Bands. And again, there's no, the way I always was taught about the Bollinger Bands, once you go outside them, there's really, it's almost like a vacuum. There's no breathing space. So tend to move back into them. We'll continue to watch. Now, if we look on the daily chart, what do we see going on there throughout the course of the week? Most of the time, SPY tracks pretty similarly the total market, and it sort of did this week. Wednesday was up a little more on the S&P than the total market, but Monday, again, a lot of indecision, even more on Tuesday, up some on Wednesday, down on Thursday, up a little bit on Friday, up 0.45% for the day. So again, still confirmed up moves. The distance between the MACD and the signal lines getting less, and the derivative oscillators lost an incredible amount of energy. It has really rocked down. So we'll continue to watch that. All right, let's go back to our weekly chart and let's take a look at the Qs. It was up 0.42% for the day. And again, it crossed over going up back on the 8th, has continued to move up like our other two indexes have. The derivative oscillators continuing to gain a lot of energy. And again, just strong up movement on our weekly charts again for all three of our stock market indexes. If we look at our daily chart, what do we see? Well, we can see that the Qs, that is the Nasdaq 100, up much more strongly than we see on the total market and the S&P 500. Up on Monday strong, little bit of indecision on Tuesday, up Wednesday, Thursday, and Friday. Again, up 0.42% for the day. Derivative oscillators losing energy, and we are seeing the distance between the signal line and the Bollinger Band decreasing, but both continuing to move up. So again, What you need to take away is that on all three of our indexes, we have strong up movement. Now, lastly, we're going to go to gold. What is gold doing? Well, gold crossed over back on the 24th going up. We've actually had 1, 2, 3, 4, 5 strong up weeks in gold through the 8th of July. Then we had a spinning top on the week ending the 15th of July, and then a down week over the course of this last week ending the 22nd of July. Actually have a filled in red candle with a down wick, which again means strong downward pressure. We don't have a crossover going down yet on gold. Gold was down Friday 0.75%, still positive on the derivative oscillator, but it's losing energy, and the MACD and the signal line appear to be moving toward each other. Hasn't crossed yet, but gold does appear to have lost some of its luster in the last 2 weeks. Still, we don't call gold in a down move yet because it's not crossed over going down. It can pop back up again, but it is tending to be down right now. Now, let's look at what happened to gold over the course of the week on the 2-day chart. What do we see? Well, we see gold, again, pretty much sliding sideways. A lot of down movement on Wednesday and a lot of indecision on gold on Monday, Tuesday, Thursday, and Friday. And then again, gold down 0.75%. It's below the 2-day trend line. Derivative oscillator lost some of its downward energy, but still everything trending down on gold. That is where we've ended up on all of our indexes. They are all technically up at this point. However, gold is not strongly up, but again, looks like it's trending toward a down move, but that has not happened yet. Now, let's do an aside here and talk about what's been going on in the market and how the news has affected things. Well, we saw that in the failed coup that happened in Turkey. We saw the strongman there take over, start moving things his way. We saw the European investors' confidence really drop with that Brexit vote as the fallout continues to go through things. We continue to see concern on the part of Europeans. We continue to see different indexes in Europe slumping, and there to be concerns about the fallout with the Brits pulling out of the euro, and that will be happening over the course of the next many, many months. Of course, Donald Trump accepted the GOP nomination. That happened in Cleveland. We've seen, this is an interesting one, IMF has downgraded growth outlook in the world. Now, again, it wasn't a big trimming. It was 0.1%, okay, 0.1% from their March forecasts. But again, they expect the global economy to grow 3.1% this year and 3.4% the following year. And again, I urge you to read the Stock Traders Almanac, see what this presidential cycle is all about, because it does not bode well for the 2 years following the election of a new president. Please read that in the Stock Traders Almanac. Again, IMF has downgraded global growth. We also see that the UK Purchasing Managers Index slumped sharply in the wake of the UK's vote in June to leave the European Union. Actually, it tumbled to 47.7 in July. It had been 52.4 was the reading at the end of June. So again, keep that in mind. Now, again, you know that we at Charting Wealth are really big about not letting ourselves be misled by the news. We are led by the charts. We don't let the talking heads on television fool us into doing stupid things. There's a saying on Wall Street, you buy on the rumor, you sell on the news. That means that by the time it makes the news, it's already been reflected in the charts and the trade is gone. That's why, since we're not on Wall Street, we focus on these charts so that you can empower yourself and see what the traders, the Wall Street investors, the market makers, all those people are seeing on the actual stock charts. That's why it is so critical to read these charts. So let's talk about what's happening ahead. Well, there's going to be in Chengdu, China. There's going to be starting on Saturday and then Sunday, and you may get this after these meetings have occurred. There are going to be meetings on the 23rd and the 24th with the G20 officials. I don't know how that's going to impact the market, if at all, starting Monday. But what's going to really be a big thing to pay attention to is the Federal Open Market Committee is going to meet to set interest rates on Wednesday, the 27th. Pay attention to that. If you are in the market, you want to make sure that you protect yourself against any bad or good news, depending on where you are trading. Just be aware of the impact that the Fed can have. They can have a great deal of impact. So again, safest thing is many times to close your trade and get out. If you are going to stay in the market, then be ready to react or insure. And those tend to be complicated things you need to understand about how to protect yourself with puts or calls, depending on any kind of option strategies. And this is getting to be very complicated for those of you who are just learning. Just practice. Just practice going through things like these Fed meetings and paying attention to what you hear and what you see and how you see the charts react. Okay, let's talk about another couple of things that are going to happen. The Bank of Japan is going to meet to set its interest rates on Thursday and Friday the 28th and the 29th, and then the week will end up on Friday the 29th with revised Q2, that's the second quarter, U.S. gross domestic product figures. How can those two things at the end of the week affect things? Maybe if things are really bad, but what's going to really be the bellwether is how the Fed meeting on Wednesday, how it comes out. If they have no interest rate increases, if everything stays the same, if they give very mild reports that, we're not going to be raising this interest rate anytime soon, you can expect the market to continue to move upwards. If they talk about tightening monetary policy, if they talk about increasing the interest rate, then of course, what happens when you stop the free money? Well, apparently that's what the market runs on. So it could have a negative bias, trending toward a negative bias. So keep those things in mind. That is where we have ended up the week. That is the news that affected the market over the last week and what may be affecting the market over the coming week. We appreciate you. Hope that you are enjoying the information that we provide to you. Again, please listen to Chapter 1 of the new book that we are working on. We're putting it out to you chapter by chapter until we get ready to publish it when we finish everything up at the end, which will be several weeks or months from now. But thank you so much. We love to hear from you. Follow us on Facebook, Twitter, Instagram, YouTube. If you want to really help us out, go to iTunes, give us a 5-star rating. And additionally, one last plea, go to YouTube. We are all getting closer every day to the magic number of 1,000 subscribers. We know thousands listen every week, but when we get 1,000 subscribers, we can start doing proprietary YouTube live broadcasts to you, and we can't wait to have that opportunity, but we have to have 1,000 subscribers. So you want to help us out, go to YouTube and subscribe to the channel. You won't regret it. Thank you so much for all that you do for us. We hope that we are helping you. We want you to become a market master. We want you to become a chart master. And the only way that's going to happen is following us every day, spending 10 minutes working on these charts, getting our daily worksheet, which you can get at our website. We also post it with all of the YouTube videos. We also post it on iTunes. It's there in all the words that we download in the show notes. So please let us hear from you. Let us know what else we can do for you. God bless. We wish you the best, that you have a great week as you practice learning these charts starting on Monday. God bless. Take care.